right, so thanks everybody for joining us on this webinar, Dunsky's latest webinar, Will Canada's 2X Electrification Strategy Actually Succeed? A conversation with Canadian power sector leaders. My name is Tommy Barbieri. I'm the Communications and Market Engagement Director at Dunsky Energy and Climate Advisors. Really happy to have you with us today. Before we get started, I just wanted to walk through a couple of housekeeping items. Due to the very strong turnout today, the chat has been disabled. However, we do invite people to ask questions using the Q&A function of Zoom. You should be able to see that under the More button there at the bottom of your screens. Please ask questions in English and French. We'll try to save time at the end for a Q&A. Et certainement des questions en français sont les bienvenues. You can also turn on closed captioning. There should be a function at the bottom that says CC. So for those of you who aren't familiar with us, Dunsky Energy and Climate Advisors was founded in 2004. Over 70 people working across North America and Canada and the US on technical analysis and strategy advice to provide our clients with advice on how to accelerate the transition to clean, affordable, reliable energy. We have offices in Montreal, Toronto, Vancouver, and we have staff sort of sprinkled across the country from as far as Whitehorse and Calgary, Halifax, Ottawa, Providence, Rhode Island as well. Next, I'm going to hand it over to our president and founder, Philippe Dunsky. He's going to give a bit of a high-level context and reaction to the recent federal electrification strategy before jumping into the conversation with our executive advisors, Chris O'Reilly, Josée Guibord, and Mark Sidebottom. So without further ado, I will pass it over to Philippe.
Great, thanks so much, Tommy, and thanks everyone for joining us. I'm glad to see that we're over 200 participants now and still rising. So that's fantastic. No shortage of interest for this topic. So look, I want to go back a little bit. We're almost to the day 2 years ago, 24 short months ago. I submitted the final report of Canada's Electricity Council after a year of work with 19 electricity sector leaders from across the country. Really interesting year, really interesting discussions, and ultimately led to a series of consensus recommendations. And I say consensus, I highlight the consensus part because it was not easy arriving at consensus, as we know, across this country, many different perspectives. But we did so. And ultimately, the objective of those recommendations was to really help Canada achieve two goals. Right? One was clean electricity, and the other was growing electricity. And really, there was full consensus on the importance of meeting this moment of electrification and the need to vastly grow our electricity systems so that electricity can take a substantially bigger share of the energy load. We're 2 years in, and we now have a national electrification strategy. And I thought this would be a fantastic moment to gather together a few of our executive advisors to look at this strategy and ask ourselves how it's doing. I'll share very briefly a couple of thoughts of my own and then get the conversation going. On my end, I will say that the strategy has a bit of a different flavor to what our council had recommended, but ultimately the vast majority of recommendations align. So there is, I'd say, very deep alignment, and I'm very pleased with a lot of what I see. And I'll just mention a few things. On the project side, one of the really critical things that we need in this country is to be able to build faster than we have in recent past if we're going to achieve the ultimate goal of something like doubling the size of the system in a single generation. We've got a lot of language in this strategy that is very much in line with recommendations that we had made around bringing more flexibility, more streamlining to the permitting process, having a champion at the federal level to help usher projects through the permitting process and really speed things up. We've got real intent and signaling around the dollars side of this. We had recommended that the ITCs, which were really on paper, not yet in practice, get done. I think they're essentially done now. And there's also talk in this strategy about some innovative financial mechanisms that we'll talk about a bit later in this conversation. The big, I'll say, winner, the big focus, I think we all know, is interties and allowing this country to trade electricity east-west, not just north-south. Again, I'll circle back on that in a moment, but there's a lot in this that speaks to the importance and to how we can get more internal trade, whether it's cooperation frameworks, whether it's cost allocation mechanisms, and big surprise in this, and again, one of the recommendations of council was extending the ITCs to certain intra-provincial electricity transmission projects because they are essential to enabling the inter as well. So all of that is in there. There's some good language around energy efficiency and load flexibility. We have the Indigenous Loan Guarantee Program, which is one of Council's recommendations that was adopted very quickly by the previous government. A lot of what we recommended is there. Some is not, and some has changed. And I'd say the one thing that really stands out in this strategy that's very different from council recommendations is around the use of gas for generating power, in particular for baseload power. So we'll talk about that today as well. I will say one last thing here. The overarching theme, the overarching takeaway from my end is that this strategy is directionally, for the most part, consistent with the recommendations. More importantly, it has, I'll say it's been raised up a significant notch in terms of the heft of government and the level of support and of priority that this seems to represent for this new government. So my big takeaways there. Like I said, I've invited a few really smart and experienced people to join me for this conversation. Let me just start with Josée Guibord. Josée, I won't run through bios, but Josée was recently the CEO of Evolugen, which was formerly known as Brookfield Renewables, and so in that capacity, of course, oversaw the building and management operation of clean energy assets from coast to coast across this country. Mark Sidebottom, who was, I'm sorry, until very recently, a few months now, I think it's just been, what, four or 5 months now, who was the CCEO of Nova Scotia Power, and Chris O'Reilly, who just last year retired from his position as CEO of BC Hydro. Obviously, 3 people who got extraordinary experience here, and we're going to use that. So with that said, let's, Tommy, can you pull up? What I'd like to do actually is start this conversation around what is probably the headliner in this strategy, and that is transmission, and in particular, the growth of east-west interties. I put up this map because you don't need to look at it very carefully to take away the big message. The big message is that in our current system, the vast majority of trade, the big arrows, are north-south. And they're north-south they're not north-south, provinces to territories, they're north-south down to our neighbor to the south, our longtime, I'll say, best friend, and a country that is increasingly unreliable or less reliable as a trade partner. We all know that. I would love to think that somehow council's urgings for more east-west ties had a lot to do with this strategy. The truth is, I think that the President of the United States had an awful lot to do with raising the importance of enabling east-west trade, domestic trade within Canada. So that's our starting point. What we're trying to do, of course, is build out more interprovincial transmission so that we can optimize our systems, so that we can get the best resources wherever they are to the loads that need them in the lowest cost way. So let me bring in the conversation here, and maybe I'll just start with Mark. Mark, you've got, we don't see it on the screen, but you've got a fair number, I'm guessing, of scars and bruises from the interprovincial transmission efforts of the past. Mark, you were deeply involved in the Atlantic Loop, and I know that you've been, deeply part of the conversations around enabling more east-west for many, many years now. What about this strategy gives you confidence, if at all, that we're finally going to break through the old logjams?
Well, there's a number of things. I think first off, there's an explicit recognition that east-west corridors, both between the provinces and through provinces, are not just important, but critical in our success as a nation. And so you start to look at, that piece. I think the second thing is, in the last 12 months, we've all learned a lot about who should we build more partnerships with. So there's an inherent higher level of interest today than there was 3 years, 4 years ago on interprovincial trade. So those are, at the highest level. I think as well, I see the tools that are being talked about here that enables interprovincial transmission more clearly articulated. There are more tools in the toolbox being considered. And you've mentioned one of those things. One item is the investment tax credits. They're a powerful tool, and they're being expanded as well. So those are some of the components that really bring a more positive outlook to me. And I think there's a general alignment now, or an understanding of alignment to the value of being better connected across our nation. So all that comes together, and I think those are very important when it comes to creating the alignment that's needed, not just necessarily technically, but politically, to actually execute on this strategy, because it's no mean feat to double the size of this grid in the next 25 years. I always used to say, it took 70 years to get us here, or 100 years to get us here, and we want to do double that in the next 25. So we really need some clear and strong signals at the federal level, and I think this strategy does that. And I think as well, it's going to require provincial partners to actually cause this to move into action.
Thanks, Chris. Moving over to you. I mean, you've got, I don't know if it's similar levels of bruising, but you've been through these conversations both with Alberta and more recently with Yukon as well. Tell me on your end, when you look at this strategy, what are you seeing? How much does it fill up your optimism glass?
Yeah, well, I'm pretty optimistic about it, and I think one of the challenges with our power system in Canada is the provincial dominance, and that's not going to go away. But I really see the federal government here stepping in a convening role and a cajoling role, bringing provinces together. And we've struggled between BC and Alberta with a lot of division on all kinds of issues. But the power systems have grown up quite differently between the two provinces, so very difficult to build connections between the two. And I think this is a window that's opened up for us with the support of the federal government to bring the two governments and the utilities and the various market participants together. It just really is a recognition, in part with the trade issues you talked about, but also as we bring more renewables into our system. And in BC, we really recognize the variability of the hydro inflows from year to year, and the ability or the need to balance that out with other jurisdictions. So I think it's a combination of the challenge before us of doubling the system, the need to practically manage a system with more renewables in it, and a federal government that's willing to make some moves and try and bring provinces together to do some good.
Chris, if we're actually to succeed, right? So we got the right signals now. We clearly have the interest on the Fed side. What needs to be done? Like what's the missing ingredient that either the Feds or provinces can?
Well, I mean, there is some good work going on. The Western Transmission Catalyst work that Dunsky is supporting, and really pleased to be part of that. And that work is First Nations led. It's multi-party. It's intended to create a base of objective information about benefits and costs and allocations among parties and provinces around the impacts of new interties, and that would lead to decisions that by governments, by utilities, frameworks for sharing costs and benefits. And so I think getting this away from just concepts to some get to the point where we can make some real decisions about individual projects and ways to knit the systems together. I think it's not a small part of the problem. Is just the many trade barriers we have effectively within provinces. Like in BC, we have a strong self-sufficiency policy that prevents BC from relying on the very high quality wind and solar resources, for example, in Alberta. So I think there's got to be a recognition that that things have to change in the provinces as they are looking at other trade barriers to make this work. But really excited about the work by the WTC.
Funny, I remember the very first time that you and I spoke we spoke specifically about that question of how can we break this logjam of BC, not being able to access these extraordinary wind and solar resources in Alberta. And, I'm heartened that you've got hope.
Yeah, I'm very positive.
Yeah. Fantastic. Mark, I just want to turn back to you for a second. I'm realizing, as we talk about specific, Chris is saying, what matters is getting to a little bit more specifics, right? It's not just a concept. We got to be talking about location and specific projects. You've got I won't say a specific project, but you've got a really big project out east in the name, at least, of Wind West. What do you think is going to be needed to get Wind West across the line?
Well, I think there's a few items that would be required in that. So projects of that potential scale, and it's huge, come with the challenges of timing each of the components in a way that they can come online or be fully utilized in a period of time. And that's, in many cases, quite a challenge. And what you see is you see an investment that is not fully utilized in, say, day one, and then the utilization grows through time to its full utilization, which could be in a mega project, 5, 10, 15 years later. I think you then get into, well, how do you attract the capital into an investment that we know is the right size strategically for the opportunity? But it may not all be attractive to investment at that front end. And I think, the tools that could start to come in are the ones where the federal government can say, look, we can step into this space and support the business case for the period of time until the utilization grows. And those are the types of tools where you can actually build this large infrastructure and then have it right-sized, and then you can start to fill that well, not the pipeline, but the wires to fully utilize it through time. And that's an example of something specific that I think will be needed on all of these major projects is how do you build it correctly for the vision? When you think of doubling our network, the ability to go at it with a precision that low growth has afforded us in the past is not going to be possible in the future. So we'll need to find, the federal government will need to find some tools to help with that somewhat imprecise nature of how something comes online. And that's an example of the type of thing that you start to have to do, because the difference between growing at 2% a year and 5 or 10% a year is incredible, and will require that kind of special treatment.
Yeah, it's a really critical point, right? I mean, fundamentally, what you're talking about is smoothing, and ultimately, I mean, because these things come in chunks, right? To your point, if we're going, at very small increments over time, it's easy to manage that. If we're going really fast, we have to build these big chunks, and so that can create cost pressures. So let's circle back to that a little bit later when we talk about tax base and rate base. Thank you for that. Meantime, let me switch over because we're very limited on time. And by the way, I noticed that we've now crossed the 300 mark in terms of participation. So thanks everyone for joining us. We will try to leave time for questions at the end. So do keep that in mind and submit your questions in, I think, the question box or something like that. All right, I'm not the moderator there. So let me just talk a little bit about the generation side here, right? Talked about the lines. Let's talk about the stuff that we need to actually produce the power. I put up here our current map, and one of the really nice things in Canada is we're starting from an extraordinarily clean base of power, right? We are the second cleanest as a country, taken as a whole, in the G7. We're the third place in the G20. It's a real competitive advantage that we have. It's also very uneven across the country. Obviously, Quebec and Manitoba and BC are blessed with an awful lot of water. Alberta and Saskatchewan are blessed with oil and gas deposits, and that's led to vastly different market shares of emitting and non-emitting resources. But we do have that starting point. Now, when we think of the bigger picture of emissions, what we realize, and Tommy, if you can switch over, if we look at the total emissions of this country, like Canada emits something in the range of 710 megatons of emissions. Of that amount, something like 40 odd come from electricity generation. It's not insignificant. It's a material amount of emissions. The really interesting thing is that we can get at reducing that 40, but even more importantly is the opportunity to grow clean power, and in so doing, crowd out other energy sources that are much more emitting. And when we look at that, the potential there it dwarfs the potential of just eliminating emissions from electricity. So one of the challenges that we have is striking the right balance between reducing emissions from our existing base and growing the size of the pie to be able to replace other energy sources as we electrify. To that point, Josée, I want to pull you into the conversation here. You have managed assets and built up assets across the country, coast to coast, like I said before. You know what it takes to win and what it takes to attract capital as well to different types of projects. When you look at this strategy, are you at all concerned that I'll say that toying again with the CER or potentially even replacing the CER is going to fundamentally change the nature of the projects that we build out? And in particular, I'm wondering, are you concerned that looking forward, we're going to start building a lot more gas for baseload as the strategy talks about?
No, I'm not overly concerned, in part because we've seen this elsewhere. We see it in the US with changes in policy and preferences of their national government to not support renewables as much. What's more important is what the provinces and what we do in terms of forecasting what's coming, and for the provinces to continue to have a broader vision than just, small incremental RFPs every few years, but more laying out what the future looks like what Quebec has done with their plan to 2035, and same with what BC is doing and some of the other provinces, and Ontario starting to be more provide more of a visibility long term as to what's coming. So from that perspective, I think that's positive. I think same in the US, they're doing a similar thing where the small regional procurements are still driving the growth, and we see that across the world as well. So long as we continue to do that, and what's important from an investor perspective is that visibility and continuity, and so not so much the peaks and valleys we've seen in the past. And this strategy helps in that it sets a large target for a large period of time, 25 years. So if we want to get there, all options on the table are going to be needed, but we know that renewables competes. It's been the case for quite some time now, and it will continue to do so, and the provinces are on board with that. So from an investor perspective, as I said, as long as you have that visibility and that desire to forecast that, then investors will come. Now, what tools we have to encourage them to come in greater numbers and provide that certainty? Well, that policy certainty is super important. And what we saw in the strategy is, putting that policy in place, but also giving some tools like ITCs and things like that, which we'll talk a bit more about later. But in terms of continuing to advance those and providing those mechanisms, and for the provinces to come with maybe even more so than they have already, with a bit of a plan, given that the national strategy is out. What do the provinces then start committing to, without formally binding them, but committing to that, so that we can see that investment going forward?
And I will note, for those who didn't follow it, Ontario recently released the results of its own procurement, and that was an untargeted, open-ended procurement. And the results were essentially 2/3 solar, 1/3 wind, and nothing else, right? So renewables won the day just based on cost in that procurement. We're anxiously awaiting the results of its capacity procurement any day now. And I think there we're going to see essentially gas versus batteries, who's winning the day. And I'm going to put my bet more on the battery side. So yeah, things are definitely changing. Mark, in Atlantic Canada, tell us a little bit about what the scene is there and what your expectations are in terms of the competitiveness of clean versus other sources.
So for Atlantic Canada, wind has been very consistently an economic choice. A lot of the modeling over the last up to 10 years has shown economically placed wind generation into the grid. And Nova Scotia, for example, has a policy of 80% renewable and no coal by 2030. And interestingly, we see definitely wind, top of the stack, as competitive. We're seeing battery storage as a competitive option to shave off those peaks. And you see the province, looking to do more of this. So very, very well structured to advance forward. And the interesting thing is, there is still a need for some amount of fossil, such as gas peakers. But I always say they're very complementary, and actually they enable the high renewable penetration. So, to complete the product for a customer, you need an amount of gas, not running a lot actually, and then complemented by wind, solar, and batteries. And you can get to 90% non-renewable if you're not blessed with long duration assets like hydro.
And Chris, I know that BC Hydro just recently announced, I'm not sure if it's reopening or extending a gas peaker. What do you think is the outlook there? I mean, are we talking about a one-off? Are we talking about, resurgence in gas peakers? What does that look like?
Yeah, I mean, I think that has to be considered, that announcement, in light of the other announcements they made recently, including a much expanded conservation program and the results of another call for power that were really positive. What they did do with the gas plants, one a peaker and one a small base load, was extend those contracts and really just take some near-term pressure off the load resource balance in the next few years, given a higher forecast load. So I think there's a strong commitment to a clean power vision in BC. And that's pretty broadly held among the population. And I think some good tools, continued wind and a bit of solar. We haven't had as much solar take up out there for obvious reasons. And some what sound like some good flexible resources like pump storage and the like coming to the fore. And so I think there's a good portfolio of resources to build on. It will require continued investment in the transmission system as these wind projects are coming up all over the province, and which was a surprise. We thought they would be more concentrated in the Northeast. And as we add more to the system, we're going to need more transmission. So important to get those ITCs for inter-provincial lines. I mean, I think one risk with the role of gas is the data centers, and we've seen you can almost have any amount of data center load that you want, and we saw the response in Alberta when they put out a welcome ad for data centers and got something like 16,000 megawatts of response, and the data centers are just such high load factor, so price inelastic, and so willing to invest that we could see that driving gas, particularly in areas where they want a lot of data center load.
Yeah, it's a really important point. So, on the East Coast, in the center, on the West Coast, not much concern about gas other than peaker plants, but big new loads in Alberta, in Saskatchewan as well, industrial loads, load growth, those could really put pressure on the power system and lead to a lot more gas, even for base load. And that's certainly one of the risks around the new strategy. All right, thank you. Let's move on. I know time is short. I want to talk about a different angle of this. We talked about the big infrastructure plays. Let's talk about consumers here and affordability. We've just been through and to a degree are still in something like an affordability crisis. We know that budgets are tight. We know that the ability of Canadians to pay higher rates is limited. When I was chairing the council, we had work done for us on something we call the energy wallet, and I was glad to see that brought back into this strategy. The energy wallet question looks at things holistically and says, all right, on the one hand, we're definitely talking about huge capex requirements, huge cost influxes into the electricity system. On the other hand, though, to the extent that electricity is replacing gas for heating or replacing oil for transportation, you're talking about massive efficiency improvements. I mean, use 3 times less energy to power a vehicle from point A to point B than is required if you're burning it in a gas engine. And pretty much the same thing with heat pumps. So we looked at that and essentially found that, in a highly electrified future, something like 70% of Canadians would actually see their total energy-related spend drop, despite the electricity portion of that increasing significantly. So one of the things we're trying to do here is figure out how we kind of square that circle of needing to add in our estimation, something like $1.5 trillion over the next 25 years into the electricity system. And on the other hand, keeping things affordable for Canadians. Let me start with you, Chris. What are your thoughts about what we need to do to keep that total spend down?
Yeah, I mean, I think it's really critical that we make the investments for all the reasons we've talked about. I think we need more taxpayer support of those investments. It can't all be on the customers, or as we traditionally call them, the ratepayers, because it's a user-funded system. So I think the future is going to look a bit more like, highways and bridges, where we have a mix of taxpayer and user funding for that critical infrastructure. So I think having the government come in with things like ITCs and financing mechanisms, perhaps financing over longer periods of time to reflect the really long life of some of these assets and the generational benefits that exist from these investments, I think is important. We've seen an example in Ontario with the bill credits coming from the provincial government, a direct offset to the bill, recognizing that this can't all be on the customers. And really, we're asking of the power system is to deliver a broader set of benefits, including climate, including security, including reorienting our trade, and that can't all be on the customers. So we need those other mechanisms.
Yeah, let's get into that a little bit. The tax versus rate base question. Mark, you're in Atlantic Canada. The federal government has a history of putting dollars into the system. Again, you've got Wind West, staring at you. What does that look like, and what kind of mechanisms do we need from the feds to kind of even this out and bring that tax base, but intelligently, smartly into the system?
Well, I think I touched on one earlier, which is, some form of patient capital. To go to Chris's point, this is an intergenerational opportunity for us, and the benefits come through a wide range of other avenues, not as particularly to the electricity consumer. In my experience, there's been some great tools offered. So CIB has put forward some low-cost debt. And in one particular project, and I think this would also work with Wind West, is they actually participated with an equity investment as well. So these are very significant benefits and tools that can be brought forward. You need potentially a contracts for difference for the first number of years, because interestingly, we are replacing assets at today's costs, which in many cases are fully depreciated, and so there is inherently a cost pressure associated with that. So we need some tools to go back to what you said, which is smoothing. So those are the kind of tools we need in front of us. Obviously, for our First Nations communities, access to that equity capital as well in a meaningful way, so that they are participating in this. In the projects that I've been engaged with, their participation has helped with affordability. And so that's an important feature. It's a great win for the communities, and it's also very helpful for the customers. Those are some examples. I guess one last one would be something called a backstop agreement, which is effectively, backstopping revenues while the pipeline or the transmission line is fully built out. But when you think of doubling the electricity consumption in Canada, it is not this versus that from a project standpoint. It's a and. We talk about projects as whether they are the one. We're going to need them all. And that's the mindset we have to start to say, how do you enable all of these projects? Otherwise, we are just going to fall short of what is a very positive vision of strategy.
So sometimes I realize that, and I'm assuming that most participants here, know this stuff reasonably well, but sometimes we just kind of throw out our acronyms, right? And I think it'd actually be worth like I'll ask Josée, you as a developer, you've had to stack multiple of these acronym benefits, including ITCs. Just walk us through how ITCs actually translate into lower costs for the system and for consumers.
Yeah, so most of the provinces, with the exception of Alberta, who is a more of an open market, the procurement recently has been done through RFPs. So because that's a competitive process, the ITCs, the investment tax credits, play a big role because you can insert that into your model. And for people who bid on these RFPs, you have very precise analysis of your cost and your return over the life of the asset, so 20 years, 30 years, whatever it is. And so every small increment makes a difference. The issue is you're trying to be very precise on your returns with imperfect assumptions, right? You assume certain things. And in the case of ITCs, if that can remove uncertainty, that's fantastic. So the ITCs coming in and providing an investment tax credit upfront for your spend or your CapEx spend, that's great. We saw that coming in a few years ago, and as you said earlier, just got formalized, like they're all kind of in place now. The issue back then was uncertainty with how they were going to be applied, who they were going to apply to, and the extent of them. And then the market kind of developing the tools around it, like an ITC bridge loan, or your financing then can be tailored in accordance with your ITC, which helps bring your bid price down, because ultimately you want to win. And so in a competitive process, you use that to bring your price down so that you win, so that you can build your project, and therefore the consumer wins. Now I'll go back to kind of that precision. The ITCs aren't helpful if they're not clear, or if there's some winners and losers. So few of the things that we saw the government do, and I would encourage the government to continue to do as they expand these or continue to apply them to different structures, is being precise as quickly as possible. So one of the things was, it being accessible to Indigenous communities. They didn't have access to it at the time. They've changed that. Being clearer on which assets get access to it. So I'll plug in here existing assets, right? So in terms of that big picture you showed earlier, that we're blessed, yes, we are. But I mean, if those large hydros and or existing assets don't get refurbished or renewed or whatever, whether they're privately owned or utility owned, you're going to see a drop. So then we're not gaining, we're not even sustaining, right? So those ITCs applying to those things as well is important, and that certainty and that speed of execution is very important.
Great, thank you. I just want to, before we move on, Mark, I want to circle back to you for a second. You talked about contract for differences, right? And we had mentioned earlier the idea of essentially smoothing, right? So ITCs are really helpful at the outset of a project, but just walk us through a little bit what a contract for differences approach could look like here, or something else really to help smoothing of costs and benefits.
Sure. So, early on, a project may be built with a certain capacity. It's a couple of gigawatts of transfer. And you might find that in the early years, the supply might be slightly above what an area's other alternative is. But in the long run, it is a bigger play. The contract for difference would hold that even, so that it was the right play for the customer at the end in the early years, and then would allow the project in its most optimum size actually be built, so that then you get the back end benefits of the scale and the size of the asset. There are several ways in which they can work, and so it's a way of creating some level of certainty, so you can attract the investment at a scale that makes sense to take advantage of that opportunity. All too often, and we've said this in the call, we we optimize in a small area because the next increment is a certain price size but if you looked out 10 or 15, 20 years, there could be a more optimum solution associated with that. And that's the kind of thing that would help you bridge to a much broader optimum project, a project of scale of national interest.
All right, thank you. We didn't even have a chance to talk about one-stop shop, but I'll just throw out this.
Yes.
We got a lot of federal supports now, right? Like we kind of went from very little to all sorts of supports. We have the CIB, we have the Canada Growth Fund, we have the new Canada Strong Fund, we have the ITCs, we have the Indigenous Loan Guarantee Program, and I'll just throw out that something like a one-stop shop might end up being very useful here. But who's to complain, when the problem is too many, not too few. Let me just we only have a few minutes left, and I want to, before we open for questions. So let me just turn to one last issue that is always getting short shrifted here, and that's the demand side of the equation. So actually, Tommy, if you can just take that off, I'm not going to talk about that now. Demand side of the equation, like we can build and build and build, and we need to build and build and build, but we also at the same time have to stop wasting, right? Like, I mean, it's otherwise we're a hamster spinning its wheels. Let's talk a little bit. The strategy talks about retrofitting up to 1 million homes. It talks about load flexibility. It talks about a vehicle to grid. There's a lot of talk and signaling, nothing very concrete. Chris, talk a little bit about how far we can go and what are the sort of things that the feds can support on the demand side.
Sure. Well, we all know that conservation, which includes using power differently, using it at different times, is often the cheapest and best resource. And I mean, you've talked about heat pumps, which are 3 times as efficient as electric baseboard heating, and more so compared to natural gas. I think what the feds can do is help with the changes required to make that more cost effective for customers. And you know of the work, the Power Efficiency Consortium work that Dunsky has been supporting with a number of utilities across the country, really enabling different technology, new technology to manage peak demand at the customer panel on the customer side of the meters. So reducing the impacts on or the need for larger service and upgrades on the power system by spreading loads out, like avoiding having your EV charger come on at the same time as your dryer, for example. So an example of changes that are required in building codes, for example, to enable and encourage and make that kind of technology more easier to apply. So I think when you put that together with heat pumps, and you can drive a lot better utilization of the grids, and I think the government has a strong role in advocating those changes. It's very difficult to change things like the building code in this country, and leadership from the federal government, I think, would be very valuable in driving that change across the country.
And could we not?
And I will note,
jump in here. Like, could we not try to get I think the feds can do something to encourage provinces to also do that it's not just a federal program on energy efficiency. Is if you have the federal program federal government put a program in place, but then if the province jumps on and supports that in whatever way, whether it's building code change or whatever, that will support, then that there'll be an incentive for them as well from a provincial perspective, that you'll add something on that's beneficial to them, whether that's transmission or whatever. I think we need to do more kind of together, that the feds do something that encourages the provinces to act, and that's like action now, as opposed to, because I feel in the past there's been other attempts to, whether it's the regional roundtables or whatever, that have taken so much time. So to me, it's more like, we want to do this. Do you want to act? Yes. And you get moving on those that are ready to act and get things done quickly.
It would strike me as a reasonable ask to say, hey, we will pump billions into your system if you help also build that system and reduce waste,
Yeah,
right? So we're not,
absolutely.
yeah.
It's
All
not
right.
a strings attached approach. Like it's not like we're trying to put strings attached, but it's more of a buy-in, a carrot. You do this, this happens,
Mhm.
and incentivizes as opposed to,
Yeah.
because we know the provinces don't like to have money with strings attached. It's not what I'm suggesting, but more kind of like a collaborative approach.
Hmm. Fantastic. And I will say,
Right.
by the way, I think the federal government is on the verge of adopting a revamp of the building code
Right.
legislation.
That's great.
So I think that's in the Senate now,
Mm.
nearing approval. All right, wonderful. Look, I know we have so much that we could talk about, and unfortunately, so little time. We're nearing the end here, and I do want to leave enough time for audience questions. So, look, let me just say thank you for this conversation. Obviously, if folks want to pursue it beyond the Q&A that we're about to enter into, reach out to us. I mean, we're all we're all more than happy to be talking about this stuff, and to wit, we have three guests here who no longer are getting their paychecks and are still
Mm.
here talking about these issues because we're all passionate about them. So thank you so much for that. All right, I'm not going to say the final thank yous now because I think what we want to do is hand it over to Tommy
Yep.
and make sure that we get a chance to walk through questions and answers.
Yeah, we received a lot of questions, so thanks to everybody for those. We won't be able to get through all of them, but I've picked out a couple and see if we can get through them. So I'll start with the first one, and Philippe, maybe you can hand them out as you see fit. But this one starts, Alberta and Saskatchewan have both implemented policies over the last year that have reduced the prospects for renewable energy growth in those provinces. Do we think that the clean electricity strategy has the potential to reverse that trend, and why?
So let me just see, do others want to tackle this one? And if I don't hear any yeses,
I'll jump in, but maybe you go first, and I'll jump in after Philippe.
all right. Well, look, I'll say this. I mean, thank you for the question. And I mentioned before that Ontario just released the results of its RFP, open-ended, and renewables won the day. And I suspect that batteries are going to win most of the day in the new results coming. The thing that's needed for that, though, is that you have to be able to build renewables, right? It has to be a level playing field in the very least. It used to be that clean required a bit of a tilted playing field to get the clean stuff to win. Now clean is winning the day on its own, but if the field is level. We know that in Alberta, there are a series of rules that have been adopted recently, both in terms of permitting and recently in terms of the latest market reform that are going to make life pretty tough for renewables developers and likely tilt the playing field away from them. So I do think that's a real issue. Can this strategy address that? I actually will point over to I'll say a sister strategy, and that is the federal Alberta MOU that was released almost at the same time. And very interesting thing that really went, I'll say, underreported in there, but there is agreement in there for the feds in Alberta to work together to revisit those rules, those internal Alberta rules in Alberta, to enable renewables to participate in the market and hopefully to play on a level playing field. So I think there's hope there. I think the feds can play a role there as part of the broader federal Alberta conversation, and I certainly hope that they will. I know I've spoken with people who are hopeful about that, and I've spoken with others who are much less so.
Mm.
And time will
I
tell.
think I think one thing we need to understand as well is the fundamental difference with that market, right? And how that market is open, and their philosophy, because they don't have a vertically integrated utility, their philosophy is to build when needed or let the market drive. And where that's been the case in the US as well, and most of the jurisdictions as well. What did that do? Because people just kept building, and this is what happened in Alberta. the transmission didn't keep up because the transmission is not an open market. It is more regulated. And so transmission couldn't keep up. And so you have an overload of renewables in the south in Alberta that was not able, then you had congestion issues, and then people got concerned about resiliency and all that. So
Very real
again, can
issues,
the
like very,
federal
very
government,
real, yeah,
sorry?
very, very real issues. Like
Yeah,
we
very
shouldn't we
real. And
shouldn't
so
minimize.
it kind of clouded a little bit are we pro renewables or not? Because some of the people who are in this industry understand the very real congestion and transmission issue that was there. So what can the feds do about that? Like how can they help Alberta, given their structure and given that they're an open market, think more build for future, when we were talking earlier
Mm.
about where we are, and the fact that Quebec has built hydros way back, way bigger than what was needed, but did it for future. How can we help Alberta do that in a way that's palatable for their market and their system and their voters? What can the government do to help them improve their transmission system for the future? Now, the land restrictions and all that, that's a different conversation, and hopefully there can be an arrangement around that as well, and hopefully community involvement and community approvals will help with that. But I think understanding the system and the reality there and what has happened, given the market and the AUC being overwhelmed with interconnection requirements, just like everywhere else in the world where there are open markets, is important to understand, and that needs to be solved.
Okay, great. I will jump on to the next one. I think we can have one, maybe two more, um, if possible. So, okay, I'll move on to this next question. The strategy has a focus on building domestic manufacturing capabilities to support electricity growth and economic development. But there are some concerns from IPPs, utilities, others about increased costs of domestic content that may sort of impact some of the affordability objectives of the strategy. So the question, I think, is how do we square that circle?
Yeah. And I will say very quickly, I mean, we're working on this right now, actually, looking at the question of how much additional domestic content can we bring into the supply chain and through what mechanisms. And one of the key things to the point of this question, a really good question, is the how, right? And this is almost the theme of the past couple of years in electricity generally, and I think it's the theme in supply chain. The how has to be almost entirely carrots, very little sticks. Like the answer cannot be at a time when we need to grow electricity so quickly and so much. The answer cannot be adding huge domestic content requirements when we haven't even built out the supply chains yet. So there's a lot that we can do on the carrot side to support the build out and target the build out so we can get to something that is much greater than what we have now, and yet entirely reasonable without going crazy on the cost side. And there's a lot that can be done there. There's a lot of when we break out the infrastructure needed, component by component. There are a vast array of components where we could build a lot more in Canada. There are also a bunch of components where it makes no sense at all, and we shouldn't even try. Right? So just being strategic, being surgical about that, and focusing on how we can help industry actually build out the supply chain before we start getting tough on domestic requirements. That would be my kind of overarching angle, and let me just see if others want to chime in on that.
Well, super quick. I mean, it's difficult where projects are already contracted and in the development process to change the rules. And I think you're hearing a big pushback from the IPP developers on that front. I think if there's time, they can respond to the rules. They can get the supply chain capability built, and it can be a good strategy. Like we have an excellent supply chain for electrical components in this country, and it can be bigger and can produce more. So I think in the long term, it can be a great source of employment and economic strength in Canada.
I think we talk a lot about the procuring side, like the IPP or the developer side buying domestic content. But there's the flip side as well, which is like, what can we do to help those manufacturers to manufacture those components at a better rate, or encourage them to sell to Canadian companies or Canadian projects, right? As opposed to fill their order books with exporting and things like that. Now, obviously, the details are very important in that, but how can you incentivize that? Are they actually properly tooled in their facility to service Canadian requirements? And if not, how can we help them? And so then comes the idea of production tax credits, which don't really work in Canada given our tax structure today, but how can you do something that's akin to that to help that production to be there from that side as well?
Thanks, Josée. And shameless plug, stay tuned for more on the supply chain side. We'll be putting out a report on that sometime in the near future. Also, shameless plug, Chris mentioned the consortium for power efficiency, and if any utilities or major players are interested in joining that consortium to help standardize peak management in contractor practices, please give us a shout. All right, Tommy, over to you.
Yeah, I mean, there's so many more questions, but we're at time. So I just wanted to thank all of our speakers for joining us. It was a really interesting discussion, and thank you to everybody who joined us. We really appreciate it. The webinar will be made available in the next couple of days, so you can look out for that. And if you'd like to hear more about Dunsky's, projects, news, future webinars, please sign up for our newsletter. You can find that on our website. And I hope everybody has a great rest of the week.
Great.
Thanks so much, everyone.
Thank you.
Thank you.
Bye-bye.